India Ratings and Research expects Indian exports to improve gradually over the next couple of years, which shall be largely driven by the combination of a pickup in global demand and global players seeking to diversify supply chains while reducing their reliance on China. We believe certain segments of pharmaceuticals, textiles, auto ancillary, and chemicals are already benefiting from this trend, giving companies the confidence to embark on capacity expansions despite the risk of a possible slowdown in domestic demand. Though China plays a predominant role in global supply chains with its cost competitiveness and economies of scale, it, however, would remain a major supply hub for the foreseeable future. At the same time, other Asian countries such as Vietnam, Taiwan, Indonesia, Bangladesh, and India will be explored over a period of time. For pharmaceutical sector, India has a high dependence on China, which is around 70% of raw material import and is reflected through the ongoing raw material supply disruption during COVID-19 pandemic. We believe India is a natural choice for the global companies for a reliable, quality and stable supply of APIs as Indian companies have the largest number of US FDA approved API plants and strong chemistry skills. Indian pharma manufacturers have witnessed increased inquiries from MNCs. At the same time, Government of India has introduced PLI scheme for the sector to decrease India's own dependence on China. Whereas in the textile segment, China has recalibrated its home textile strategy recently with more focus on domestic front along with increased cost that is essentially driving global textile companies away from it. The share of India's home textile exports to the US market has increased for some home textile segments, whereas the same has fallen for China. Overall, the home textile share in the global market has increased, but India could not grab the market share in the apparel exports and lost the ground to other Asian nations. Therefore, India may emerge as a preferred choice for the home textiles owing to adequate raw material supply chain compared to China, but its apparel share in global exports will be significantly low compared to other Asian countries. In auto ancillaries, we expect the sector to grow on account of increased domestic demand and global de-risking from China over the medium to long term. Indian exports have either remained stable or slightly improved in 2019, while China had seen a contraction in its exports on account of certain trade restrictions. India has seen an increase in the number of international purchasing offices. These are dedicated sourcing offices for global manufacturers. These India-based offices have witnessed increased order inquiries. Therefore, China shall remain the biggest global exporter of auto ancillary goods, at least over the medium term. India could still see attraction as a safe alternative source to the global automotive companies. Furthermore, in chemical space, we believe the domestic chemicals industry growth prospects are intrinsically linked with the overall economic growth driven by the end user industry and Atmanirbhar push in the form of import substitution. India is a net exporter in segments such as dyes and pigments, and this trend is expected to continue. India stands to benefit in the export market due to the geopolitical trade tensions, constant supply disruptions from China, including during COVID-19 pandemic, and India's ability to manufacture quality products at a lower price than its Western counterparts. The chemical sector participants are undertaking high project capex to consolidate their position in the global supply chain and diversify cash flow streams. Overall, the chemical manufacturers will benefit on account of three factors: increased import substitution, growth in domestic and global demand, and move to de-risk the supply chains away from China.